What's up, guys? Welcome back to This Just In. Thank you for joining me today. In this video, we're going to take a quick look at an update on IPOE, the Sofi SPAC we own. It's one of my favorite plays, and I want to kind of give you my thoughts about it. So let's not waste any time. Let's jump right in. All right, guys, before we get started today, subscribe to the channel, hit that bell notification so you can stay up to date. I try to post new videos every day with growth stocks, penny stocks, market news, anything I can, do to help us grow our portfolios. There's a link down in the description to my Patreon account. Come join the family. I did the first 50 patrons for just $1 for the day one squad. Wanted to show mad love to my, my day one supporters. That are really helping me grow the channel. I love you guys more than anything. You have no idea. We've got about, I want to say it's less than 10 spots now. I want to say like 8 spots or 7 spots. But when you come over, you'll get access to the private Discord where we talk stocks, links to 4 different portfolios so you can see exactly what I invest into. And then anytime I buy or sell a stock, up to the second I do it, I send out a notification so you can follow along with that. And then anytime I enter a swing trade or a crypto trade, I notify you as well. So if that's something you're interested in, if you want to come be in the day one squad and support the channel and be in the family, we'd love to have you. So come on over. But guys, let's jump in. I want to make this video quick today. Everybody knows how the SPACs are kind of going through the SPAC attack right now, especially after the SEC came out and said that they're really cracking down on regulation, looking a lot more closely at these SPACs. Don't get me wrong. We have had some SPACs that probably had no business going public. We probably had some hedge funds, starting SPAC companies and going out there and targeting companies that were inflating their numbers and just to kind of ride the craze of the whole SPAC, excitement that was going on. But obviously we've got some good ones. I wanted to show you this. So this tweet from Chamath, he said, "We are proud to announce that IPOE is leading the pack in responding to the SEC guidance issued April 12th on SPAC warrant accounting." Read the SEC here. And then this was a tweet from the Sofi Twitter. It says, "Sofi Investor Relations here with an update on our process of going public. We just verified an amended S4 with the SEC to reflect the new accounting guidance on SPAC warrants, and we look forward to hearing back from them." And then it says, "Once we clear any comments on the filing from the SEC, the next step would be to request effectiveness, followed by a mailing of the proxy and a duration of 3 weeks for shareholders to vote." So I like seeing that, guys. That's good news because this SEC guidance has made a lot of people uneasy with these SPACs. A lot of people are out there saying that this is the end for SPACs and this is going to kill them. And I think that, when you start looking at some of the companies that probably had no business going public anyways, I see more regulation on SPACs being a better thing. Because it gives investors more confidence in the SPACs they are investing. If the SEC just lets anybody bring any company public and they can inflate their numbers and whatever else, that doesn't give investors any confidence, because then they know that they don't know who to trust. They don't know what SPAC is telling the truth, or which one's good or which one isn't. Now, I'm not a fan of stuff like the PDT rule. Where they want to protect us as investors. Like, come on, give me a break. I work for my money. I should be able to trade it however and whenever I want. So I'm not okay with that. I'm a, way limited government, stay out of our lives, let us do our thing. But stuff like this, that's more holding the big money, the companies, the SPACs, those types of things, holding them more accountable so that, we can have the utmost confidence in our investments, I do agree with. At the end of the day, we don't know which SPACs are telling us the truth, which numbers are inflated, which ones are out of control revenue guidance. Obviously, we can do some research and kind of get an idea. But overall, I think it is a rather good thing, because if they tighten it up, you'll have a lot less SPACs coming through, but you'll have a lot higher quality of SPACs coming through, which is a good thing for us. So I wanted to give you an update on Sofi, guys. I love this stock, one of my favorite. Think it's going to do very well. I just had my brother buy some shares yesterday. I added some shares a few weeks back. I think that if we look at the chart here, this was the bottom back in March, right? And it kind of stayed right there. Anytime it got down a little bit lower than that, it did start making its way back up to kind of find that base again. This was one of the SPACs that I thought was going to get hit just as hard as Skills and a lot of those other ones, because when you look at the short interest, I mean, it was one of the most shorted stocks back in like February and March. It still has high short interest. I want to say it's still upwards of like, 30%. But this right here should show you there's some resilience in the buyers that are kind of standing there pushing back and keeping this around this level. Now, it did get down here to the $14 mark, which I thought was a great price for the stock. And ever since, a couple days back when the market kind of started showing us some green, we have started to see some gaps up. And it started making its way back up towards the upside. I think it was up at one point around 4% today. It looks like it's about up 1.3% as of right now. But overall, guys, the SEC guidance that we just got, they're leading the pack. If they're the ones out there, getting their guidance sent in, doing what they need to do, I think that'll give investors a lot of confidence that they've got, nothing to hide. They're not worried about anything. They're all good with their warrants, whatever it is. And when that vote date comes up, I think, obviously everybody will vote yes. The merger will get, confirmed and completed. Now, obviously, that's my opinion, right? Anything could happen. Everybody could vote no and it doesn't go through, which is very unlikely. But I do like to see that they're being vocal about it. They are one of the first ones to come out and say that they're doing something. They've already sent it in. They're waiting. I think that gives investors a lot of confidence. This is a stock that I could see somewhat of a short squeeze happening on. It may not be something like what happened to Skills where it pops 3% in a day. But I could see this, maybe getting a little bit of that squeeze effect, where it starts to kind of move up. Now, I don't think, again, it's going to be anything major because we've been getting shorted for the last 2 months at a pretty high rate. And with that being said, it hasn't made those outrageous moves yet. So I do think that it will, start making its way back up towards the upside, especially as we get, the next 2 or 3, 4, 5 weeks out. I did want to kind of talk a little bit about the capital gains tax raise yesterday. I sent out a thing in the Patreon last night of just kind of my thoughts on it. Guys, the way I see it is everybody knows that this has been coming. Biden's been talking about raising taxes for years, and so it's not like this was completely blindsided us. The other thing I want to say is don't get me wrong, initially at face value, it looks like a horrible thing for the stock market, right? But I don't think it's that bad. When you really start kind of dissecting it and start thinking about it, there's 2 types of money in the stock market. You've got the day traders, you've got, short-term in and out, riding trends, quick money. Then you've got your long-term investors. Well, capital gains tax only affects you, over that year period. And it only affects you when you sell, right? You can keep it in stocks and you could have 400% gains over the last 5 years, and you're not going to pay that capital gains tax until you sell it. And so the people that this is affecting is those long-term investors that have a lot of money in the market, millions of dollars, over $1 million. And, the way I look at it is they've been investing for how long? They knew this was coming. They're not stupid. And they're kind of stuck right now. It's like if they sell it now and they're like, I'm just going to sell it and take my gains, that I've had over the last few years, so that I don't have to pay the higher tax when it comes into effect. Well, yeah, that's fine. They'll save today. They'll save a little bit on the taxes today, but they still have to pay taxes on what they did make. And then what are they going to do with their money after that? Are they just going to let it sit in their bank account, or are they going to go invest in gold? What are they going to do, right? Because if they let it sit in cash, inflation's going to just destroy it, and they're going to end up paying that in depreciation over the next few years anyways. The other way to look at it is if they have had it in there for so many years, right? Say they're long-term investors, they've had their money in the market for 5 to 10 years. It's almost like you think that they're just all of a sudden going to stop investing. Not a chance. Not a chance. I don't see it like that. There obviously is other asset classes out there that they can move their money into, but they still have to pay capital gains tax on it if it's real estate investment, anything. So the way I see it is they've got a few options, and the most logical option to me seems like leaving it in there and not selling, so they don't have to pay the capital gains tax and just riding it out. You never know. I mean, President Trump could get reelected in 2024 and just go in there and cut it out anyways. I have no idea what's going to happen. I can't see the future, but what I'm saying is they're used to leaving their money in the market for a really long time. They're not the type of people that just panic sell. They don't move in and out. They don't sell on news. News is something that I feel like gives the market an excuse to react and to move. It's not like the deciding factor for those types of guys. The other thing is if you notice, the small cap stocks, the mid cap stocks didn't do too bad yesterday because that's not where a lot of long-term money's at. The long-term money's in, blue chip growth stocks, Apple, Amazon, Google, stuff like that, where these lower risk, SPACs, high growth stocks that we, invest in a lot of the time, that's not where long-term money is. So I don't think we have to worry about that. But sorry, guys, I just wanted to kind of give you my thoughts. I don't think it's that bad. Obviously, it looks really bad at face value, but I think when you really look at it, it's not catastrophic. It'll be just fine, especially, when we start looking a little bit down the road once everybody kind of gets over it. And again, when you're a millionaire, you're not stupid. You've been planning for this. You're not just going to, make a rash decision, hurry up and sell and just leave it in your bank account. Cash is not the place to have your money right now. Cash is a depreciating asset. If you leave your money in cash, you're going to lose money over the course of the next 10 years. You're not going to make money. So the other way I see it is if they leave it in their stocks, they'll end up paying more tax, but they'll also end up making more gains. So it's like, where does that point of diminish? Is the gains going to be higher than the tax that they're going to pay if they leave it in? Or is the tax going to be higher than the loss that they'll take if they pull it out and leave it in cash? So guys, I think it's totally fine. I'm not too worried about it. Again, guys, if we take a look here, we were starting to get this, inverted cup handle. We did see this sell off right here. And then, like I said, started to get a little bit of gaps up. Overall, guys, I think that this 1416, 1467 is the bottom for me. I don't see it coming, down much further than that. Obviously we'll probably run into some resistance on the way back up, especially when you start looking at where some of these gaps are, especially right here at the $20 mark. We'll run into some resistance, but I do think that we will start seeing the market, advancing, especially in good solid SPACs like this, as long as they keep coming out with, good news. The SEC comes out with some news. I don't think that SPACs are going to keep getting attacked like they have been the last few, weeks/months. They've also, if they come out with good earnings, that will help out the stock a lot. Like PaySafe, for example, they've got earnings coming up on May 11th. I think their earnings will look great, and it will help the stock a lot. So this is a stock that I am absolutely, holding on to. I'm absolutely adding it on any sign of weakness because this is a very, very good stock. This isn't one of those SPACs that is a ridiculous revenue projections, very iffy business model. Like, they're doing business. They've got a great app. They've got, multiple streams of income. They've got that bank charter, and they're making moves in the SEC guidance, which is nice. So down here, guys, I would, wait and see if it'll come back down here and fill these gaps. When I look at a stock like this, I know we are always so, it's hard not to be day to day, but when you look at it and you're like, okay, if I buy it at 16 and it drops back down to 14.86, I mean, it's really not that big of a deal if you plan on holding it for the long term. If you buy it at 15 versus 14 and it goes up to 28, it's not that big of a deal. So the other thing I wanted to touch on, guys, is over the last little while, we've had these terms come into the stock market, and like buy the dip, right? Buy the dip. Well, yes, buying the dip is a thing that should be done in certain occasions. I've talked about cost averaging down before, where you should be cost averaging down with intent when it's going to drastically, decrease your cost average. But when I say buy the dip, guys, really the only time that you should be buying the dip, buying the dip is when you are looking at the chart and you see a clear, concise reason to buy that dip. If you see a bullish engulfing, or you see some type of bullish pattern or a reversal pattern, or it's sitting at a support line, or whatever it is, you don't just buy the dip because it dropped 5% that day. Buy the dip when either A, you've got an unbelievable amount of conviction in that stock and you plan on holding it for the long term. B, if it's going to drastically, cut your cost average, and C, if it's at a point on the chart that makes sense. If it's at the top of a resistance line, bounces off resistance and sells off 10%, but it's still, 60 points above the nearest support level, don't buy the dip there. Buy the dip in certain scenarios. I know that, that term has been, that and diamond hands. Buy the dip and diamond hands has been a term that's just been coined in the last few months. But guys, that's it for today. I like Sofi a lot. I think the stock's going to do very well. I like the bank charter. Overall, I think the stock should have no problem getting back up here to the $26 to $28 range. And really, when you start looking out 2022, I could see the stock being a $45, $50 stock, no problem. I love it. Think it's great. If you've got a price target, let me know down in the comments. I'd love to hear it. This video is for entertainment purposes only, guys. I'm not a licensed stockbroker. Always go do your own research and due diligence. Don't just take my word for it. But come join us at the Patreon if you you want to talk stocks, you want to ask me some questions, you want to be in the day one squad, help us grow the channel. We just hit 800 subscribers today, guys. So thank you guys so much. I love you all. You have no idea how much it means to me. Like the video for me if you get any value out of it, and I'll see you guys in the next one. Peace.